G'day and welcome to this bonus edition of Shares for Beginners. I'm Phil Muscatello. Listeners to this podcast will be aware that there's a special place in my heart for the Australian Shareholders Association. They're a fantastic organisation that lobby for the interests of shareholders as well as providing a wealth of investing education. I've partnered with the association to produce a new podcast called The Equity Investor Journey. I'm sharing an episode as you may be interested in hearing more. This one features Steve Mabb. He's a professional investor and a company monitor for the ASA. He's talking about some of the ETFs that he has in his portfolio. They offer access to a much wider range of investment choices than simply buying a single company on the Australian share market. I hope you enjoy listening.
Having lived in the US for a while, identity theft is a huge problem over there, and there's lots of companies that are, providing subscriptions for credit monitoring and identity protection and that kind of stuff. This is a pretty big problem, and, hopefully the companies that are in that ETF have a better chance than average, I think, of, doing above average revenue over the next few years at least, as they try and help governments and companies and individuals combat, the cybersecurity problem.
Welcome back to the Equity Investor Journey, brought to you by the Australian Shareholders Association. I'm Phil Muscatello. Today I'm welcoming Stephen Mabb, who is a professional investor and an ASA monitor. G'day, Stephen. How's it going?
G'day, Phil. Really well, thanks. How are you?
Oh, I'm very excited about this new podcast. I've got to say, it's just great to be doing some work for the Shareholders Association. Here we both, I think we've both fallen in love with them, haven't we?
Yeah, absolutely. Look, I think it's terrific as well, mate. And I'm hoping lots of ASA members get, lots of good information and ideas out of the podcast. I think it's terrific that, ASA and you are doing that for the members.
So today we're going to be talking about exposure to international markets via well-chosen ETFs. But first of all, tell us a little bit about your background and what you did before becoming a full-time investor.
Yeah, so I am, I'm fortunate that I'm the tender age of 44 at the moment, and my executive career has been in the footwear business, where I worked for, a couple of different companies in Australia when I was younger, and then with some Aussie business partners took a footwear brand over to the US in 2007, and it was just before the GFC, so our timing wasn't great, but we just kind of decided to stick it out and try and launch the business even through that period. And then over the next 12 or 13 years, we built Vionic, which was the brand name, up into one of the top 20 footwear brands in America, which was fantastic. Really enjoyed it. I lived over there for about 10 years. And then in 2018, we sold the business to one of the big publicly listed footwear groups over there. And that gave me, a nice chunk of capital to do something with. So for the last couple of years, I've, basically become a full-time investor and, really focused on trying to learn as much as I can. And, ASA has been a huge part of that journey. I've, learned a lot and been to lots of events with the Queensland team in particular. We've got a great team up here of conveners, Rima and Alison and Jill and Don and all the team. And I've been to lots of meetings and learned lots, and, I'm sure we'll continue to learn lots going forward.
So what was that first step that you took before you made your first investment? What did you do to keep yourself informed?
Yeah, well, I'd actually, read Scott Pape's book, The Barefoot Investor book, and, learned some good stuff out of that. And then I thought, I don't want to put all my money into the market straight away. I'll start with, little small amounts and just practice a little bit, so to speak, which is what I did. I, made a few, stock picks and kind of tracked how that was going. And then, as I kind of did more of that, I kind of built my confidence and saw how the results were going as I was tracking it, and then started to dollar cost average, I suppose, and put more money into the market each month. So yeah, ASA has been a huge part of that for me, though, because I've learned so much from going to the meetings and talking to other members that I wouldn't have got there as quickly on my own, of course.
Wise and opinionited.
Yeah. Well, that's kind of part of the
It's part of the fun of it, isn't it?
You can test your thinking and get other people's point of views, and even if you don't agree with them, it's still good to kind of challenge your thinking or, get you considering something you mightn't have. So, yeah, it's a great process.
Well, it's like I've spoken with a couple of fundies on my other podcast, and they have meetings, and they often have quite robust discussions in those meetings where they're testing each other's investment theses out. So when you're an investor on your own, it's good to be able to have someone to chat with and test your ideas out.
Yeah, definitely. I mean, I do think it can be a little bit lonely at times, right? Investing when you're on your own and, you're just at home or whatever. So it is great to, get together with other people and, chat about those things and hear some other ideas. So yeah, terrific to be part of the group.
So we're going to be talking about ETFs for getting into international markets. Why do investors need to consider international markets?
Yeah, well, I've thought about that a lot, and I guess I'm fortunate that I had quite a bit of international business experience, spending a long time in the States, and, we also did business through Europe and Asia Pacific, and Australia was actually one of our smallest markets, to be honest. So I kind of learned a lot from, doing business in those markets when I was in the footwear business. And then subsequently I've listened to, what I think are some very smart people in Australia that focus on international equities and bonds, etc. So I'd been to some meetings and listened to those people and learned a lot. And I think some of the stats that really got me thinking were, just the rate of growth that's projected in Asia in the next 10 years. There's some pretty serious tailwinds behind, particularly China and India. And in Australia, we get a lot of, I think, sometimes negative press about some of the Asian markets. But, when you strip away the populist type rhetoric and look into the numbers, the demographics and the amount of growth that's projected in, Asia Pacific, particularly in the next 10 years, to me felt like I wanted to at least have some of my portfolio allocated there. Hamish Douglas from Magellan, I've heard him talk several times about China. They've got a lot of their, fund invested in Chinese companies or US companies doing business in China. There's another really smart lady I listened to at an ASA event, Dr. Mary Manning from Elliston Capital, and she's a real expert on India. So I've listened to a few podcasts with her and learned a lot from her as well as hearing her at the ASA meeting. That just got me thinking that I don't necessarily want to have all my money in Australia. I mean, I love Australia and we've got a great, group of companies here too, but, about lots of people would have heard this, right? But I think it's about 40% of our market's made up of, banks and miners. So I didn't want all my money allocated there. I really wanted some of it to be in some of the, the other types of companies that are changing the way the world operates that you just can't get, directly in Australia.
Well, for me, what really brought it into focus was hearing a presentation from Emma Kirk from Magellan, where they were talking about a company like LVHM, which investing through LVHM into the Chinese market. And
I've actually had a good chat to Emma myself at a meeting, and yeah, she's very knowledgeable. I went along to one of her presentations too, and yeah, I mean. Louis Vuitton, Moët Hennessy, I think it is, LVMH, right? And they're at the forefront of taking advantage of the rising wealth and consumption that's happening in China. And her and Hamish have both talked about pretty much a tripling of what they'd call the upper class in China. I think the projection is that there's 50 million people right now that can afford a Louis Vuitton bag. But it's projected to go to about 150 million in the next 10 years. And then the middle class, which is more kind of like an average Western style level of consumption, I guess, I think it's about 150 million people right now, and that's projected to go to 300 million. I might have those stats a little bit wrong potentially, it's just off the top of my head, but I know that that kind of growth over 10 years is going to, assuming it plays out, or even if it plays out at half that rate, it'll still be a much higher rate of growth and consumption than we're going to see in probably lots of parts of the developed world or the Western world. So I like having some exposure to some companies there like Louis Vuitton and others that, are hopefully going to take advantage of that growth.
So it's not very difficult to get into international markets anymore because you don't have to go and set up an account, but you can do it with an ETF that's available on the ASX.
Exactly, yeah. So that's really how I've done it, Phil. And, John Cowling, our great CEO at ASA, he asked me to write an article for Equity Magazine, which I did around this. So, what we're talking today about, I think there's an article in last month's, the March issue, and maybe another one coming up in April that cover these ETFs that I've been exposed to. But yeah, that is the point, right? You don't have to directly, trade in America or China or anything like that. You don't have to worry about opening, international accounts and foreign currency and all that kind of stuff. You can get exposure to lots of these things using credible, trustworthy ETFs that are listed on our ASX. And that's how I've done it. I've basically built a portfolio of 7 ETFs that are all, some of them are indexes that track the really broad index, and then a few of them are themes that are, trying to tap into some of the, the growth stories in these areas above and beyond the index. And that portfolio has done, really well for me. I'm beating it. I've been doing it for about a year and a half, 2 years now, and my portfolio is beating the All Ords by a long way. Even through this, big, unfortunate, tough downturn we're having at the moment, that portfolio is still up about 10% through that, year and a half, 2 year period. So it's been the best performing part of my investing so far, and I'm feeling obviously more comfortable and confident in this part of my investing going forward based on the results so far.
Okay, you've started investing in the stock market. Now, how do you track trades, dividends and distributions and all those other goodies? Throw away those clunky spreadsheets with ShareSite. I have my portfolio in ShareSite and everything is automatically recorded. ShareSite is pleased to extend a special offer to listeners of this podcast. 4 months free on an annual premium plan. Go to sharesite.com/shares for beginners and sign up now for a 7-day free trial before taking advantage of 4 free months. That's sharesite.com/shares for beginners. Well, it's interesting too that you've one of the themes that you've invested in is cybersecurity, and that seems to be a very obvious thing where companies that are involved in that space are in very high demand. People don't realise what's going on in the background, trying to keep systems and functions.
Exactly.
Keeping them going.
Exactly, yeah. I mean, having lived in the US for a while, identity theft is a huge problem over there, and there's lots of companies that are, providing subscriptions for, credit monitoring and identity protection and that kind of stuff. So we did that while we were there because we didn't want to get, our data hacked and not know about it. But, then you read about, the last US election and, other governments meddling in the US election. And I think to myself, well, if the US government can't even protect itself against some kind of, cyber threats, this is a pretty big problem. And, hopefully the companies that are in that ETF have a better chance than average, I think, of, doing above average revenue over the next few years, at least, as they try and help governments and companies and individuals combat, the cyber security problems. So, it may not play out, but I just thought that was a bit of a theme that I'd, put a little bit of my portfolio into. And again, that's just an ETF that's listed on the ASX that has about 50 global companies that focus on, helping companies and governments with that problem.
What is the ticker of that ETF?
Yeah, the code is called HACK, which is, pretty good ticker for that kind of thing, I suppose. I think it's a beta shares ETF, that one. And yeah, the ticker's called HACK.
Yeah.
I obviously covered this in the article that I wrote for Equity, but it did pay a really big dividend last year. And I know a lot of people, love dividends, as I do too, if you can get them. But I did talk to beta shares about that. And the dividend last year was a big part of it was realised capital gains. So they weren't as confident that dividend was going to be the same this year. If you go and look at this and you think that's a juicy dividend, I'm not sure it's going to be the same again this year, having talked to beta shares.
It's not sustainable.
Yeah, it was a bit of a one-off, I think, as they realised some capital gains in the ETF. But, it was still income and they still paid it out. And, I was happy to take it last year when it came through.
You'll take it anyway.
Yeah, exactly.
So the other ETFs you were talking about was a NASDAQ ETF and an S&P 500 index ETF.
Yeah, so I did a lot of homework on, how the US market's been performing against, the All Ords, and, as far back as these indexes or ETFs, have history for. And what was interesting was the S&P 500 has outperformed the All Ords by about 5% a year, I think it is, over the last 5 years. In terms of, this is all total return again, right? So including dividends for both indexes. So the S&P 500 is beating Australia, pretty comfortably for the last 5 years. And then the NASDAQ is actually beating the All Ords by about 10% a year for the last 5 years. And when you think about why it's, it's Apple and it's Facebook and it's Amazon and it's Google and it's, Berkshire and all these kind of companies, that's what's in the S&P 500 and the NASDAQ in, certain companies. So, I've allocated, about 20% of that international portfolio to each of those two because they're really broad indexes. They're, obviously very well diversified and you don't have to worry about picking the winners. Whoever the top 500 companies are in America, you're going to get that with the S&P 500, and it's really low cost as well. I think the management fee is about 0.04% to actually have exposure to that S&P 500. So it's, much better obviously than getting the same thing through a fund manager that might be 1 or 2% in that instance. So that's where I've got, a good chunk of my money in those two US indexes.
And how about the Asian ETFs? What are you looking at in those?
In Asia, I've got a few different ones as well. So again, I've got a really broad index, which is Vanguard this time. So that the ticker for that's VAE. And that's basically the top 1,200 companies across the whole of Asia. So again, really broadly diversified. Obviously, China's a big part of that. India's in there, South Korea, Taiwan, all those kind of things. And again, the management fees, fairly low for that one. I think it might be maybe 0.4% or something like that off the top of my head. Again, it's in the article if you want to refer back to it. Or any of these ETFs, you can do a really quick search online too. Just search the ticker code, and then there's always a fact sheet for them that'll tell you what the fees are.
Do you know the website ETF Watch?
I do. It's really good. Yeah, I think I might have. Is it Steve Bull? I think I might have listened to one of your podcasts with Steve before, which was great. So yeah, that is a great site to visit and check all the details. So yeah, I've got the Vanguard really broad index, and what's interesting about that one is the PE ratio for that Asian index is a lot lower than what Australia or the US average PE is. I think it was maybe around 12 or something like that recently. And also the rates of growth are a lot higher. So the companies in that index on average are growing, I think, about 11% per annum. And the return on equity is really good too. I think it's around 14-15% return on equity for those top 1,200 Asian companies as well. So it looks to me like it's really good value, I thought, compared to, the US or the Australian indexes that were a lot pricier than that for the rate of growth we're getting. So that's a big one. And then I have a couple of, more themed ones again. So there's one the ticker is called Asia, and that's basically the top 50 technology and IT companies in Asia. And it's the equivalent of the Facebook, the Microsoft, the Google, etc. So it's Alibaba and Tencent and Baidu and JD, some Indian technology companies as well. So it really covers the kind of Asian versions of what we're all really familiar with in the US and Australia. And that's held up really well actually through the downturn we've been having too. It's not off anywhere near as much as the developed indexes are. So I've been really happy with that. And I think, again, there's obviously good future growth prospects for companies that are in, that part of the economy. And then another one that I have is called CNEW, is the ticker for that one. That's basically kind of the NASDAQ of China, if you like. So it's the top 120 companies specifically in China in the new economy. So it kind of excludes banks and miners and financials and stuff like that, and instead focuses on healthcare and IT, consumer spending, consumer discretionary type stuff. So again, that's done really well through the downturn as well. And, obviously there's risk in all of these things. If things suddenly went bad in China or the government changed the rules or something, then of course, you'd want the option, or you have the option to get out. But at the moment, my base case is that that's some good diversification for me, and that, hopefully most of those themes are going to do as well or better than the All Ords does for me, and I want some of my money allocated there.
So just before we sign off, you're an ASA company monitor. Who do you monitor? Who have you got in your sights at the moment?
Yeah, so I'm not an accountant by trade, in any way, shape or form. So I've been trying to learn as much as I can about financial statements and accounting, and it's obviously really important for my investing as well, I thought, to know that stuff. I've recently joined the company monitoring team, and going through the process of learning how all that works. So I worked with a couple of monitors that are already existing monitors up in Queensland, Mike Sackett and Alan, on Technology One, which is one of the really very high-performing Australian companies over the last 10 years or so. It's an enterprise software business out of Brisbane. So I assisted Mike with that one, and obviously met with the team, and then attended the AGM and all that kind of stuff. And going forward, I'm hoping to monitor a couple of companies, working with Fiona in head office, that have recently been added to the ASX 200, and we're not currently monitoring because I have holdings in both of them. So yeah, working with Fiona, and hopefully at some point we might be able to start monitoring Jumbo Interactive and EML, which are, new entrants or newer entrants into the ASX 200 that we haven't covered before. And again, they're both based up here in Brisbane. So you look, it's a great process, the monitoring, from a personal point of view. I'm learning, plenty going through that process. But it's also one of the great value propositions I think that ASA offers, right? That we're out there talking to the largest companies in Australia, meeting with management, and then trying to represent retail shareholders, in the right way with those companies. So I'm really happy that ASA does it, and I'm trying to give back a little bit and help out there however I can.
Yeah, keep them on the straight and narrow. Hey? Some of these companies need it, don't they?
Yeah,
they need the right incentives.
I mean, look, hopefully most of them are good, but when they're off track, it's good to have someone like ASA to, at least give them pause for thought and hopefully challenge them on some of the things they're doing that might be good for us.
Stephen Mabb, thank you very much for joining me today.
Thanks very much, Phil. My pleasure, and appreciate all the hard work you're doing.
This podcast is for information and educational purposes only. It isn't financial advice, as we don't know your personal financial situation, so you shouldn't buy or sell any investments based on what you've heard here. Any opinion or commentary is the view of the speaker only. This podcast doesn't replace professional advice regarding your personal financial needs, circumstances, or current situation.